So the big question is this: how do aspiring real estate investors like us escape from the rat race and build real wealth and freedom without access to millions of dollars in investment capital and start to live the life that we know we deserve? This is the question, and this podcast will give you the answer. My name is Zack Childress, and welcome to Real Estate Investing Talk Show. I want to touch on what our topic is about. It's about talking to lenders. So let's kind of move this into two categories real quick for you. So category one is obviously traditional lenders. We want to be working with traditional lenders. They are going to be the cheapest money. They can be the hardest to qualify, and some of you may not be able to qualify with a traditional bank, but that's okay. That's why we have asset-based lenders. But when you're calling up a bank, when you're just calling a bank out of the blue, you're using like usbanklist.com or US Bank locations, whatever, to find small banks in your area. When you call them up, and usually it's going to be a teller or an admin person answering that phone, you need to make sure you understand what you're asking for. So that phone call needs to go a little something like this. They answer, "Hello, this is, First Choice Bank. How can I help you? Hi, my name's Zack Childress, and I was calling in today because I wanted to see if you guys have a couple of loan programs that will work for me as an investor. I want to see if you have a couple of loan programs that will work for me as an investor to build a relationship with your bank." And the teller or whomever will say, "Okay, well, what type of loan programs are you asking about?" Or they might just send you right over to the loan office, or they might send you to the new account rep. Either way, you might get transferred 2 or 3 times before you get to the right person, because that teller may not even understand what you're asking. So don't get discouraged. Just keep repeating yourself. Let's say the teller says, "Oh, great, I'll send you over to New Accounts." New Accounts gets on the phone and says, "Hey, this is John. How can I help you?" "Hey, my name's Zack Childress. I'm looking to build relationships with a bank in your area, and I want to see if you have 2 different loan programs that will work for me as an investor in what I'm trying to do." Let's say that new account person says, "Oh, well, I'm in New Accounts. You need to speak to our mortgage broker." Great. Thank you. You're just going to keep saying that until you get to the right person. The mortgage broker gets on the phone. "Hey, this is Charles. How can I help you?" "Hi, my name's Zack Childress, and I'm calling today because I'm looking for a bank that I can build a relationship with in your area of Arlington, Texas. And I'm looking for 2 types of loan programs to work with me as an investor. One type is I'm looking to buy properties for long-term holds to rent out for cash flow. And the second program is I'm looking for a loan program that will allow me to purchase an investment property that I need to fix up and resell. Typically, that loan is going to be a short-term loan, anywhere from 3 to 9 months. Do you offer those 2 loan programs? And what you'll find out is that they may not offer those 2 loan programs. They may only offer one. For instance, I was on the phone yesterday with a bank for a student, and one of the guys says, "Oh yeah, we'll do the long-term rental properties all day. We'll do anything from 1 units to X amount. We have that side covered." And I say, "Great. So anything that cash flows that's between 1 unit to 4 units, you can work with." Yes. And the reason that we clarify 1 to 4 units is because once we get into 5 units and greater, it becomes more of a commercial type property. They want more down, where we can get less down payments, typically in the 4 units and below. Great. So on the fix and flip side of the investment type loan programs, you don't do those. "No, we don't really do those." Okay, great. So I just write that bank down. I make a note. They deal with long-term holds, and then I just call the next bank. And I just repeat myself. "I'm calling in today to build a relationship with a local bank in this area, and I'm looking for 2 types of loan programs. One for long-term holds for cash flow to build wealth with, and I'm also looking for a loan program that will allow me to purchase properties that I'm going to fix up and resell. Do you offer those 2 loan programs?" Let me get you to the right person, is what they'll say. Great. Go to the mortgage broker. Mortgage broker gets on, or the loan officer gets on the phone. You go through the same thing. "Yeah, we do both." "Oh, awesome. So can you tell me a little bit more about how you do both? What is your loan to value limit? Loan to value is different than loan to ARV. Be clear on that. So speak their language. They don't really work with ARV in most cases, especially in straight acquisitions or in rental types. They deal with loan to value. Loan to value is what is the purchase contract and what are they willing to loan up on that purchase contract. It might be 80%. It might be 85%. It might be 75%. You don't know. All banks are different. You cannot assume that because one bank says that they'll do this, that they all do that. You will be surprised at how banks are all kind of different in their appetite, what they're willing to loan money on, and at what rate and what safety net or risk management they're willing to loan money at. And so that comes from just continually talking to them. And so let's say that we get on the fix and flip side of the loan program. You'll see like they're all different. Like we talked to one yesterday for this student, and he said, look, we will go up to 70%, I believe is what he said, of the entire acquisition. Okay, great. So entire acquisition means not just the purchase price. It means construction too. So in that aspect, I clarify total acquisition. So you mean if I was to buy it for 100 and I needed 50 to fix it up, you would loan me up to 70% of the 150,000. Yes. Awesome. That's great news. I appreciate that. So now tell me, what do you need from me? And then that's when they'll start going through the things they need you to provide to them so that you can start that initial relationship. And then obviously they're going to want details on a deal when you come into one. But I highly suggest when you find a lender that is saying, yes, I'm willing to do this, you set an appointment and you go down there and talk to them, especially if you live in the same area. There is nothing more powerful than having a straight face-to-face conversation and a handshake along the way. That's what it boils down to, okay? Now, let's take that path and let's move this over to asset-based lenders, okay? So when you're calling an asset-based lender and a hard money lender, it is an absolute, complete different conversation. They are very short to the point in most cases and do not want to stay on the phone with you very long, because they already know what you do. You don't have to call up an asset-based lender and say, hey, do you guys fund fix and flips? No, that's what they do. You have to call up an asset-based lender and shoot right to the qualification questions. Hey, my name's Zack. I got referred to you guys. I see that you're hard money or asset-based lenders. I just need to know, what is your qualifications? What do I need to be doing right now to get to you so that when I find a deal, I don't have to do all this then. I can do it now, be prepared, have a file on hand with you guys so that when I get a deal, I can submit it and we can move forward on funding. They love that. They're like, look, this is somebody that understands the game. They don't, he's not trying to waste my time and I'm not going to waste his time. They'll say, great, what's your email? I'll send you all the stuff we need. Super. Here's my email. Send this over to me and I'll start getting it worked on. And by the way, how does your program work? What is your max loan to ARV? Remember, with banks, it's LTV. With hard money and asset-based lenders, it's ARV. What's your max loan to ARV? Oh, well, we loan 80% of ARV. Do you also loan on constructions? Yes, we'll do construction and draws. Awesome. What type of rates do you charge? We charge X. What's the length of the term? We're 6 months. Great. Do you offer extensions? You're just shooting right to the point, guys. Right to the point, right to the point. What's your rate? What's your term? Do you offer extensions? Very important question is, do you offer extensions? The reason is because in 6 months, if you don't have the house sold, you don't want them to take it back. So you want to comply and you want to pull an extension on it so you got more time to sell the house, okay? But they're very short to the point. And here's the thing, they're not there to coach you and talk to you and guide you and answer your questions. They're not going to, most of them, 90% of them will not do it. They just absolutely won't do it. Here's the difference. With a local-based bank, they're going to sit down with you. They're going to entertain you. They're going to talk to you. They're going to be nice to you. Why? Because they're in the consumer service business. That's what they are. They're building the community. Asset-based lenders and hard money lenders, they could care less if you like them or not. Like they could care less. So you got to be very specific. You got to be to the point with them. Do you fund on this? Do you do fix and flips? Yes. Do you do commercial? Yes. Do you do long-term holds? Yes. Great. What's the paperwork I need to get prepared for you to create a file on me? So when I find that deal and I'm going to get acquisition money from you, I can already have my file in place. Super, Zach. I like how you talk. We're moving along. What's your email address? Here's my email address. Great. I'll send you over everything I need from you so that we can get a file on you in the office. I appreciate it, man. I don't want to waste your time. Hey, by the way, talk me through your program. If I'm going to bring you a fix and flip, what's the term, what's the rate, and do you offer extensions? Well, our term is going to be 6 months. Our rate's going to be 10% with 2 points. And yes, we offer extensions for an additional 2 points. Great. That's what I need to know. Hey, by the way, Mr. Hard Money Lender, if I'm going to find a commercial deal, an apartment complex for 100 units or whatever the case, do you fund on those so that I can get them repositioned and get refinanced out? Yes, we do. We'll fund up to 70% of the ARV, or they might say even based on an index value of cap or something like that. And we'll say, okay, great. So you'll give me 70% of the acquisition based on where we are, or 70% of what the value could be. And then they'll answer. Awesome. Now understand me this, when you're borrowing asset or hard money lenders on a big apartment, you don't want to hold it long term. There's no cash flow in it. So the very important question is look, I am going to stabilize this property and refinance it. Do you have a prepayment penalty? Okay. Well, yeah, we'll have a prepayment penalty for the first 6 months. Okay, great. What is that prepayment penalty? Well, it's 3 points now, and it drops a half a point every month that you have it. Okay, great. So if it takes me 3 months to stabilize it, then I've got 1.5 points that I have to pay if I'm going to refinance out of it. Just the questions you've got to ask so that you know how to communicate with those types of lenders moving in. Because let's be honest, if you get a smoking deal on an apartment complex, I might go to an asset-based lender just to get the money to acquire it right now so I can stabilize that thing. And then I can go to a local bank and say, look, it's stabilized. The DCR is, 1.8, 1.7, what you want it to be. The cash flow's coming in. We did this, X, Y, and Z. We've got the property value up. I need to get a refinance on this thing. Great, we'll refinance it. So now I can pay out that expensive money. I can pay out that hard money that's on the property or asset-based lending, but I've got to have my minds in check so I don't get hit with major fees. So that's why I'm always asking them when the play is to refinance, what do you have prepayment penalty? Right? Prepayment penalty just says if you don't go the length of the loan, then you're going to have to pay me points for that. That's the same way if you're going to buy a rental house. Let's just scrap the apartment complex. Let's scrap the 100-unit apartment complex. Let's just say you're going to go buy a duplex and you're going to use hard money to do that. You're going to ask them the same question because your intent on a cash flow property, if you're using hard money, is not to leave that loan in place. It's not. It is just to use it for the acquisition, which means you may get zero cash flow while that loan's on there. But hey, that's okay if I can acquire it with that, and then I can go to a local bank and reposition it and get it refinanced. Now I literally have no money in the deal, and I might even put money in my pocket. This is the number one play that commercial people do with commercial buildings and apartment buildings. Their goal is to refinance it every time. Reposition, refinance. Why? Because if they're buying it right, then the reposition and the refinance, the property's going to be more worth more than they bought, so they can pull $100,000, $200,000 out. Where do you think that money goes? That money goes into a whole nother building. All you're doing is you're getting one building, refinancing it, taking that money and the privates that joined you in on that, their money's coming back in the refinance. Now you've got their money, plus you got more money. So now you can either go do two more or a bigger one. And then you reposition, refinance it. You just keep doing it. A lot of people refer to it as the Burr method, right? Buy, renovate, rent, refinance, and repeat. You can do that on a single family home. You can do that on a duplex. You can do that on a multi-unit. You can just keep stacking and turning and building, stacking and turning and building. But at the end of the day, I hope you guys go back and watch this over and over again. And here's why. Share this. By the way, share this. And the reason I want you to share this is because people need to understand when you're communicating to a bank, whether it be a traditional bank or whether it be a hard money or asset-based lender, it has everything to do with your ability to articulate what you want in your communication. This is why I'm always telling you, get on the phone. The more you get on the phone, the better you're going to be a communicator, and the better you're going to understand what you said and what you said right and what you said wrong. But it will not happen if you do not pick that phone up and get on it, okay? Whew, man, I'm getting hot today. Anyways, guys, that's what I got for you. How do we talk to lenders? Well, I just gave you the rundown. So I appreciate all you guys being on here. You've been listening to the Real Estate Investing Talk Show. I'm Zack Childress, and I'm on a mission to create 10,000 real estate bosses over the next year. Will you be one of them? Head over to my website, reisuccessacademy.com/web class, and register for my free web class where you'll discover how to escape from the 9-to-5 grind and become your own boss in real estate. See you there.